Shares of Twitter were pummeled after its leaked first quarter results came in well below guidance and consensus expectations. I'm joined by Jack Moore, Director of Research for Action Alerts Plus. And Jack, the results came in below your expectations as well. Are they as bad as they seem on the surface?
They're pretty bad. And I think the results in the quarter were okay. I think that if it was just the quarter, the stock certainly wouldn't be down this much. But the guidance, I think a lot of people were really bullish. I mean, it's run up 42% until yesterday for the year. And the expectations for the Q2 guidance and the full year guidance were very high, and they just were so low. The guidance came in so low. They're having trouble monetizing, and the conference call didn't exactly add any inspiration.
Yeah, it seems like it's getting more and more difficult for investors to keep the faith in the company's ability to monetize itself. And you and Jim Cramer often talk about the innovation at Twitter. Is that something that can propel shares higher long term?
Yeah, I think they definitely have a pretty innovative platform. It's very tough to monetize the platform. I think it's a lot harder than Facebook because they're limited by the kind of simplicity of the business model. It's not like Facebook that has so many different offsprings where you're jumping to page as one page and you kind of like go off of that. And I think where it broke down was their advertising. They have this direct response advertising where they launch this huge initiative where companies can advertise and have direct targeting, but also will have like a direct link to downloading the app or downloading the product or whatnot. And that was supposed to be a huge hit, and that just did not take off. So that's concerning. But they are innovative. Periscope, which is their video streaming platform, had 1 million people sign up in the first 10 days. And so there is innovation, but how do you make money off of it?
Right. And you and Jim own shares of Twitter for Action Alerts Plus. What are you doing with the stock? And a lot of people are wondering, should they buy on weakness?
Yeah, I think it gets really interesting. I mean, look, it's down 20%, and I think they washed out this quarter, I think they knew that the guidance was going to be bad. They knew the quarter would be disappointing, and I think they said, look, we're not going to try to have too high of manage people's expectations upwards. We're going to take everything down. We're going to wash it out, and we'll go from there. So I think under $40, which I think it's trading around there now. Maybe it's dipped under a little bit. It gets very interesting. The final thing, if it gets lower, and I think even irrespective of that, they could be taken out. That's a true opportunity, and I think that Google's looking at them. I think a lot of companies, bigger companies, are certainly in the mix because the platform has so much opportunity, but the current management team isn't capitalizing on it.
So all is not necessarily lost for now.
Hopefully not.
Thank you so much, Jack Moore, Director of Research for Action Alerts Plus.
Thank you.
And I'm Brittany Umar for The Street.